Did you know that keeping all your money in one account could be costing you big time? Many people mix up checking and savings accounts without realizing how each serves a unique purpose. Here at Budding Wallet, we break down the difference so you can stop leaving money on the table and start building your financial future. The importance of your bank account. Your bank account is more than just putting money into an account. It's the command center of your entire financial life. For most people, their first bank account is a checking account. It's their first real introduction to the financial world. Usually, it is opened when a person gets their first job so they can have a place to cash their checks or set up a direct deposit. But what is a checking account exactly? Checking Accounts 101. Think of your checking account as a pair of shoes. They are always in motion. With checking accounts, your money is always in motion. It's always coming in and going out. As long as your checking account balance is sufficient, your daily and weekly transactions will run smoothly. Checking accounts are mostly for paying bills, rent or mortgage, buying groceries, and setting up direct deposit for your paychecks. For non-essential items, it would be the main hub, like, for example, subscription services, buying something from a convenience store, or purchasing a cup of coffee from your favorite eatery. With a checking account, you receive a checkbook and a debit card. A checkbook allows you to write checks, and your debit card allows you to shop on and offline. Using your debit card at your bank's ATM branches is free. However, you will incur a fee if you use another bank's ATM. Checking accounts generally have no limit on daily transactions. They were designed with daily life in mind. And in our daily life, we pay bills, buy groceries, pay for transportation, write and deposit checks, and so forth. If you take out more than you have in your checking account, you may have to pay a fee for insufficient funds. This is known as overdrafting. Now on to the importance of your first savings account. But what is a savings account exactly? With a savings account, your money is parked. There's an imbalanced relationship with you and your savings accounts. You're expected to give some more rather than take. In the past, the federal government wanted to dissuade you from taking, so it imposed a limit on the amount of free monthly withdrawals. It has since lifted that limit, but many banks have opted to keep some version of withdrawal limits. If you go over the bank's limit, you usually pay a fee. It's a measure designed to help you save for that yearly trip, or a down payment on a new home, or build an emergency fund you may need in the future. Depending on the type of savings account, if you make too many withdrawals, the bank might convert it into a checking account. Let's look at comparisons between a savings account and a checking account. First, the similarities. Both checking and savings accounts are Federal Deposit Insurance Corporation insured, or FDIC insured. What this means is that banks insure your money up to $250,000. It was founded in 1993 as a response to the 1929 stock market crash, which caused widespread financial losses and triggered the Great Depression. According to the FDIC, since its creation in 1993, no depositor has lost any FDIC-insured funds. Now we'll look at the differences between the two. Access: checking versus a savings account. Checking accounts usually allow unlimited daily transactions with debit cards, checks, and bill pay or money transfer apps like Zelle. Savings accounts, on the other hand, usually have monthly withdrawal limits before fees are imposed. If you're finding the information useful so far, please hit the like button. It will help us out greatly because it lets YouTube know you find our video helpful, and we'll send it out to the YouTube world so it can reach and help more people. And because we are a new channel, we can't grow without your help. Interest, checking versus savings. A checking account generally generates an interest of about 0 to 10% on average, whereas savings account interest, on the other hand, can range from 0.40 to 4%. Online banks and high-yield savings accounts are usually at the higher end of interest rates. Fees: checking versus savings. Checking accounts usually have more fees such as overdraft, maintenance, and out-of-network ATM fees. Monthly maintenance fees usually get waived if you set up a direct deposit or maintain a certain amount of money in the account every month. Some banks will waive the monthly fee if you have a specific amount of money on the first day of the month. For example, with my bank, the monthly fee can be waived if I have at least $2,500 in my checking account on the first day of the month. Savings accounts usually charge a fee if you go over their monthly withdrawal limit. You may also incur a fee if you over-withdraw. Many online banks don't have monthly maintenance fees, and some online banks don't have minimum balance fees. This means you could have $0 in the account and won't have to worry about a fee. Side note, I can confirm this from past personal experiences. Savings accounts at brick-and-mortar and traditional banks may have monthly maintenance fees if certain requirements aren't met. Next on the list, purpose. Checking versus savings. A checking account is like your car, helping you get to the point A's and B's of daily life, while your savings account is like your garage. It's meant for storage. Checking is for flow, and savings is for growth. Quick question: do you have both a checking and savings account? If yes, share your answer in the comment section. And because you stayed and watched almost until the end, here are some checking and saving account tips. For your checking account, try to have just above 1 month's expenses to avoid overdrafts and fees. If possible, set up overdraft protection. If your savings and checking accounts are with the same bank, link them so that money from your savings can cover any accidental overdrafts in your checking. Set up auto pay for your bills. This allows the bills to come out automatically on a set day of the month and frees up mental space because you won't have to think about it. Sign up for bank alerts. They help keep surprises to a minimum. You'll get email or text notifications about low balances, overdrafts, or large transactions the bank may deem suspicious. Opt for direct deposit. Most banks will waive monthly maintenance fees if you opt for direct deposit for your paychecks. For your savings account, treat it like a required bill. Set up automatic transfers, allowing money from your checking account to get transferred to your savings. Have it set up for the day after you get paid, and aim to have 10 to 20% of your paycheck go towards your savings. Explore high-yield savings accounts. Online banks and credit unions typically pay 10 times more than the national average interest rate. Emergency funds should go in a high-yield savings. 3 to 6 months of expenses should live where it earns interest yet remains within reach when needed. If you have a savings account, but want to explore other options on making your money grow on autopilot, then check out our video on bank accounts that grow your money while you sleep. If you get a windfall of money, put it in a high-yield savings first before investing it. Storing unexpected cash in savings gives you time to think about long-term moves like brokerage or retirement accounts. Short-term goals like vacations, a new laptop, new furniture for your residence, and so forth should go into savings and preferably under separate sub-accounts if your bank allows it. Avoid savings account debit cards if possible. Some banks offer debit cards for your savings account, but I do not recommend it. Convenience is the enemy of compounding. For both checking and savings accounts, enable two-factor authentication, set strong passwords, and sign up for transaction alerts to catch fraud early. Now that you know the difference, checking for daily spending and savings for future goals, it's time to take charge of your finances. Open a high-yield savings account today or review your checking fees. Start small, but start now. Your future self will thank you. Ready to build that financial foundation? Then check out my video on bank accounts that grow your money on autopilot while you sleep. Until next time, thank you for watching.